Hi guys, it's Still Inspector here. Welcome back to the mining show. Today we have 4 articles that we're going to go over. The first one is going to be the Ergo's re-emission vote, the EIP27, and then we'll get into the other ones. So the first one is the Ergo's re-emission vote, EIP27, a path to sustained growth. As a proof-of-work blockchain, Ergo has defined a mission schedule for the release of the ERG tokens. When Ergo launched in 2019, there was no ICO, which is an initial coin offering, no pre-mine and no pre-allocation of tokens for any founders or venture capitalists. Basically, if you don't know what this means, many tokens tend to give out some of their initial tokens to founders, or they allow a pre-mine where only certain select members of the mining community are allowed to mine on their coin before it hits actual open markets. So it says here, Ergo's emission schedule is set to be completed within 8 years with a strict supply of 97 whatever million. During the first 2.5 years, the emission schedule sent a small portion of each block to the Ergo Foundation treasury. This was basically to, fund projects on the Ergo blockchain. So it kind of put money aside to grow this crypto. After 2.5 years, the Ergo Foundation ceased to receive any rewards from the mining protocol and have received 4.43% of the total Ergo supply. So the original emission schedule. Ergo currently mines blocks every 2 minutes. For the first 2 years, each block was set to release 75 Ergo into circulation. At the end of the second year, the emissions rate was set to drop by 3 Ergs per block, with a schedule that would see block rewards further reduced by 3 Ergo every 3 months. After 8 years, the total supply of Ergo would have been completely mined and the mining protocol would be reliant on transaction fees and storage rent for reward miners. Recently, the Ergo Foundation undertook the initiative to ensure the long-term sustainability of the mining protocol by proposing an amendment to the emission schedule. Basically, they want to change this so that miners can get more, or the 8 years can be changed to further years in the future. As the blockchain is still in its early stages of focusing on promotion and development, there was a concern that the ecosystem may need time before the end of the 8-year emission schedule. If there was not enough dApps for users in the ecosystem at the end of the original emission schedule, there may not have been enough transactions to incentivize miners to maintain the network. Ergo's co-founder Alex proposed a solution to this possible scenario, which is the EIP27 proposal. This would see Ergo's emission extended by approximately 17.38 years, thereby offering the time to develop necessary crypto economic security for the blockchain. The plan alters the amount of block rewards so that a portion of the supply can be put into re-emission contract, and that will release the block rewards in approximately 2045. On Ergo, miners enjoy the ability to suggest and vote on proposed changes to their network. With the new EIP27, the proposal required a 90% pass vote in order to be scheduled for implementation. The mining community voted over 90% in favour, and after a successful testnet implementation, the new emission schedule is slated for development with block 777,217. The founder provided the following breakdown of the re-emissions to a recent EIP27 update on the Ergo forum post. If block reward is not less than 15 Ergo, send 12 Ergo to the re-emission contract. Otherwise, block reward R, which is the 15, is less than 15, then send 3 Ergo from its re-emission contract. These new emission rules will be integrated with the original emission schedule of the white paper. Currently, block rewards are reduced every 3 months by 3 Ergo, and this will still be the case after this new proposal. However, once implemented, the block size will be 51 Ergo. Based on the original re-emission schedule, the next reduction in rewards will take place around July 2nd of 2022, so it's coming up close. The block rewards will be reduced by 3 Ergo, therefore the total block reward for each block will be 48 Ergo. 3 months from that date, the block reward will be 45 Ergo, and so on and so on. This reduction schedule will continue until block rewards are 3 Ergo. Block rewards will remain steady at 3 Ergo until the re-emission contract has been depleted. So what does this mean for us miners? Well, the emission schedule basically it is a thing to it's kind of like Bitcoin's halving, but it kind of drives up price as well because the block rewards are getting less. The scarcity of Ergo in the system is going to be less as well, so the supply and demand will go up. This will encourage, price of Ergo to go up, and for contractors and developers to actually deploy dApps onto the ecosystem. So this was all put in place just to have a large amount of dApps on the ecosystem when the re-emission schedule is done, so that the transaction fees will encourage miners to keep mining Ergo. It says here, EIP27 is a commitment to ensuring the long-term and sustained growth of the Ergo platform. So as I said, they want a sustained growth, so at the end of the 17 years they are hoping to have dApps on the network in a large enough scale that the miners will still want to mine and maintain the network. Personally, I think this is good for Ergo because the 8-year schedule was kind of short in terms of other cryptos, because Bitcoin's obviously got until 100 years down the line until actually all the blocks are going to be mined. So this allows for people to start building and gives them a 17-year time frame to build on the Ergo network. Please let me know in the comments what you think about this new Ergo EIP27, and if you have any questions on it, I'll try and answer them in the comments below. So the next news article that we're going to go over is the crypto miners spent 15 billion on graphics cards in the last 2 years. So 15 billion is a lot of money. Basically 15 billion is going into the pockets of either Nvidia or AMD. Obviously there is an aftermarket value price that people are going to be paying on eBay or Amazon or for different other cards. It's hardly any secret that following the boom of cryptocurrency prices throughout 2020 and 2021, this has been a primary factor why general graphics cards prices, and the stock levels have been so poor for the general consumers, like, you and me, obviously not you and me, but gamers and stuff. Did you ever wonder, if we are not getting these graphics cards, how much are they industrial scale operations actually spending on them? Well, following the report via TechRadar, researchers estimated that the total expenditure over the last 2 years has been around $15 billion. The cryptocurrency market led to a $15 billion worth of graphic card sales. Although the figure is just clearly a rough estimate, it has been suggested that out of every 10 graphics cards produced in 2020, at least one of them went to some kind of cryptocurrency mining operation. Now while this might not be on the surface, sounds like a lot, just consider how much better things could have been with that extra supply coming into retailers. Remember as well, for those obscenely huge figure of 15 billion, is solely in regards to graphics card sales. This doesn't even begin to touch all the other associated expenses such as power supplies, electricity, racks, ASIC machines, and everything else associated with crypto mining. The only real good news is for us consumers that with Bitcoin tanking, cryptocurrency is demand, and at least at the time of writing, at rock bottom. So the AMD Radeon 7000 and the Nvidia GeForce RTX 4000 GPUs on the horizon. Hopefully we're not going to see a repeat of the last 2 years. So yeah, I think Nvidia have said that they're going to push back the actual release of the 4000 series just because it'll give time to get the 30 series to be bought by people that can't get them at the prices that they were 7 months ago. With the AMD Radeon 7000, that has been pushed back as well. Typically AMD have a lower price range for their GPUs when compared to Nvidia, just because Nvidia tend to be better at mining, so people want to buy more Nvidia cards over AMD cards. Obviously most mining algorithms are made for Nvidia cards. This is why. There are mining algorithms like Fero and Ethos which are made for AMD cards and that run better on AMD cards. So overall 15 billion is a lot of money for people to be putting into graphics cards, and it also said that power supplies, electricity, ASICs are not associated with this. Overall I think we're looking at more like 50 billion in terms of ASICs, power supplies, electricity and all the stuff that goes associated with it. Just because ASICs are a lot more expensive and people have been buying ASICs out and they're nearly out of stock basically everywhere you go to look for them. So now let's move on to the next article. Iran plans to cut off electricity to authorize crypto mining units. So back around, I think it was 2 months ago, Iran actually said that they were allowing cryptocurrency mining, but now they're telling people to basically shut off their electricity even though they are authorized for crypto mining. The electrical energy of authorized crypto mining units will be cut off from the beginning of the next Iranian calendar month until the end of the restriction. According to the Iranian energy minister, there are currently 118 permitted Bitcoin mining units in the country, all of which must disconnect from the national grid by the beginning of next month. According to the forecast, the nation's electrical energy consumption reached a record 62,500 megawatts during its peak consumption last year, which is a significant figure. Furthermore, he added that the consumption requirement this week will exceed 63,000 megawatts, implying a limited supply of electrical energy. Following the Iranian government's approval of cryptocurrency mining as a commercial activity back in 2019, a number of companies began mining crypto across the country. Owing to the country's extremely low cost of electricity, and now Iranians' energy plans have begun to see this business as a way to increase their revenues. Over 1,000 permits for the cryptocurrency mining units were awarded and trade in January 2020. In addition to this approved units, some unlawful miners have begun mining Bitcoin using household electricity, causing major challenges for country's electrical energy industry. So yeah, obviously there are going to be, like these small miners that use GPUs and stuff like that, just because if energy is really low in a country, people tend to use that as Bitcoin mining countries. Now, does this exclude Ethereum miners? I don't know. Bitcoin miners are obviously a bit different, but as I said, there's 118 permitted crypto miners in Iran, so these are probably big facilities that are connected directly to their national grid. Now, there will be other miners, there could be people that have like 2 ASICs that are just running it in their house, or they have a couple of GPUs running in their house. These won't be picked up on their, grid for Iranian mining, but it will also be considered illegal if you are mining with a GPU in Iran. So what does this mean? Well, a lot of people are worried about the electricity costs as they are going up, and this is obviously a big thing for Iran because they need the electricity for other uses and other bigger things in the country. They don't want to have a electrical, failure just because people are Bitcoin mining. So over the next couple of months, I think we're going to see a lot of countries crack down kind of on Bitcoin mining, or at least in the next month, just to see where their electricity costs are coming from. Obviously, there's still a lot of people mining in China illegally, so they might have a crackdown on that as well. Typically, the US is very good to Bitcoin miners, and they don't really care too much. Obviously, we've seen the thing in New York, but we all know that Texas is the main hub for crypto mining just because of the electricity costs. So overall, I think we're going to see a crackdown on just Bitcoin mining in terms of countries that are smaller and that have low energy costs, just so they can keep their energy flowing and not have any interference from Bitcoin mining. So this last article is that here Bitcoin miners plan to survive the crypto crisis. Bitcoin's ongoing bearish streak has significantly affected not just holders but even miners. Bitcoin miners turned into not sellers of Bitcoin. The miner inventory is dropping to new lows. Miners might not necessarily turn bearish, although it did look like some offload excess inventory. Bitcoin miners have been distributing their holdings of Bitcoin during the recent sell-off, albeit a slower pace compared to how it was earlier this year. So obviously we've seen a lot of Bitcoin miners just sell off at around 40 to 35k. This is just because they knew that this crash was going to happen. Typically it is Bitcoin miners that know this, big farms know this, because they are supplying the Bitcoin to different platforms. The chart attached here shows the 30-day change of Bitcoin supply held in miner addresses, according to the data compiled by Glassnode. So it just shows this chart of miners' net positions and miners' position change. As you can see, back in February they were offloading, they had a lot of Bitcoin in their accounts, and then it came all the way crashing down in March, April. So this is around the same time that Bitcoin's price was actually falling. And then it shot up a little bit and now it's way in the red. This is because miners have been selling off. Now, miners do directly affect the environment of the Bitcoin ecosystem in terms of price. If all miners stopped selling, their actual Bitcoin, it would mean that nobody could get a hold of any more Bitcoin. Technically it would drive the price up, but miners aren't going to do that. Here the red dip hinted at Bitcoin miners becoming net sellers after being a holder for months. Indeed, May and June both saw this chart narrative. In May, public mining companies sold 4,411 Bitcoins. This figure is 4 times more than the average of January to April. Financial statements of public mining companies showed that they had to quadruple Bitcoin sales to make ends meet. So if you're really smart about Bitcoin trading or in the cryptocurrency in general, you would see that these miners are starting to sell off. Obviously I don't know where you'd get this information from early, but if you see these miners start to sell off, that's probably a good sign that the market is going to be going down. If you can get in and sell off your crypto when the miners start to sell off, you'll probably be in a better off place than where you were if you just sold it like right now, for instance. The decline in Bitcoin miners' revenue could be a key reason behind this scenario. Miners' balances have recently declined at the peak rate of 5k to 8k Bitcoin per month, or roughly 150 million to 240 million worth at 30k. So as I said, they're selling at 45 to 30k instead of down to 20. Currently the total miner revenues barely amount to close to what it was before. This is evident in the graph below. This graph just shows the additional to electricity prices are rising given the inflation scars. Furthermore, the profits of miners fell along the cryptocurrency rates. This effort is at a distribution to offset the further losses. Also, the hash rate observed did a fall during the month of June as the revenues continue to stay low. This hash rate is an indicator that the measures of the total amount of computing power connected to the blockchain. The miners have stated that the disconnect from the machines perhaps because of low or no profitability levels. It just says here that currently miners' position changes might not have led to the Bitcoin price swings. I don't believe that. I think that miners are a big driver in the Bitcoin price swings. However, at the time the King coin did note that 8% hike on the coin market cap after trading at around the 80k mark. Obviously went over that yesterday. And deepening bearish narratives such as extreme sell-off could infer the corrections though. So that's it for the video. If you guys did enjoy, then please leave a like and subscribe to the channel. I'll leave links for all articles in the description if you want to check them out.